My name is Steven, and before we go into today's lesson, I think I need to give you a little previews of what actually we are going to be doing today. I want us to consider Fibonacci level. What are those levels that we have in Fibonacci? And what are those things brokers are hiding for you in setting your Fibonacci level? These are what we are going to be looking at. I believe you follow my previous lesson on entry system. You will agree with me that entries are done from a bigger time frame. You understand? And from a smaller time frame, we actually enter the market. And basically what I use is 1 minute chart to take my entry. So before we go into another class today, we are going to be considering what we know as Fibonacci level. So I want you to stay to the end of this video, and so that you'll be able to get how to set your Fibonacci level, because the setting you are having on your broker's platform is quite different to what we are using in trading. So this has to be changed. You have to look at the way we do it on this class. So I want you to follow me right down to the class while you stay. And don't forget to subscribe to this channel so that we can grow this channel together. We can have a community of traders in Nigeria. You understand? So we can grow it together. I'm here to provide adequate information on how you can survive, on how you can trade. I'll be providing a lesson or a kind of video on how you can build your trading system, how you can build $1,000 to $4 million in 1 year. This is what I believe in the next video. If you subscribe to this channel, we'll have all this information at its unfold. So I wish you good luck in your trading, and God bless you. Thank you very much. Thank you for joining me in this video. In this video, we shall be looking at Fibonacci. What are Fib levels, and how do we use Fib level to enter our trade? How do we use Fib level to take decision while trading? Now, we shall also be looking at Fib level with we shall make a combination, that is, we shall combine together our Fib level with our pivot level. And then we shall also look at this area that when the Fib levels and the pivot level meet together at a particular area, what are the implications to the price and what are the implications to the trader? These are what we are going to be considering. Now, we are also going to be looking at the setting of the Fibonacci level. How do we set our Fib level? How do we actually set it so that it can meet up with the trading system that we are actually trading? Because we look at the setting of the Fib level to what we have in our custom chart, it is not the same. The default is not the same. So there is some little adjustment to this level. Now let us go into our Fib level. Let's see how it works. Fibonacci level are critical levels that trader needs to observe. These are levels, these are points that the trader needs to observe. Fib particularly, it could be used in different forms. It has been used it can be used in aviation industry, even in medical industry, even in in finance industry. So Fib are used in different ways. So as a matter of fact, these are the setting of our Fib level. So for you to know who made the Fib levels and all these things, I prefer you refer to Google for further information about this. But I'm going to be taking you into how we plot the Fib level and how do we actually use this fib level to get an entry. Now, our aim at this, at the index trader, is to be able to get an accurate entry. Now, we realize that getting an accurate entry is one of the prerequisites for trader. It's one of the arsenal that trader need to overcome the trading problem. Sorry about that. Now, we have set up a particular level for our trader, for people who want to understand this. Now, if you look at this chart now, you will realize, you agree with me, if you look at these numbers, you will realize with me, these are what? These are levels that we have in our fib level. So the level start from 0, you understand? Is 0, is 0.236, is 0.382, is 0.5, is 0.618, is 0.7861. Then we move to 1.618, 2.618, 1.27 minus 0.27 and minus 0.618 minus 1.618. Then these are the major difference. The description here are the major difference. Now, I'm going to teach you how I set this, and I'm going to give you a link to these descriptions, how this is being used. Now, if you look at this place, let's take it from here. We have percentage and dollar sign, and we have XXS. This is how it works. This is how it works. Now, if you look at what I mean is the percentage and SSS is actually how the setting is being done. Now, if you are setting your own fib level, you have to put percentage and percentage and dollar sign, and make it what? To make it, and you put 3 space in between. I'm going to teach you that. And put 3 space in between so that you can understand how it is run. Now, what is the essence of this dollar space? Is to convert those figure, to convert the figure to actual, those figures that are coming up. That when you plot it, if you plot the normal, you will not get those figures exactly. But this will enable you to convert the figure to normal figure that we are going to see. You understand? We are going to see all this figure on the chart. Now let's move to our chart and see how it is run. Now, if you look at this place, I've already plotted mine. So if I'm bringing it out from here, this is my fib level. I want to check how this is how you are going to take it from ground. Look at the way this run. Look at it from here. Now, if you look at the left side from here, I think I need to magnify the chart. Look at the left side from here. You will agree with me that there are levels. That from here now, this is WTI. So from here now, we have level 105.18. Then we have level 106.076, level 106, and these are figures that are not going to show with the broker setting. Are you getting my point? These figures are not going to show with the broker setting. So if you take my template, now this is how you are going to, if you want to set your own, this is how you do it. This is how you do your own setting. You come here to property. You come here to property, because I've set my own already, so I don't want to disregard the number. So what you do now, as soon as you come to property, you come here, you double click on this place, you put the dollar sign, then you input all these numbers that I have here. You input them one by one. You input all those numbers one by one. And if those numbers are not enough, you add to it. If you get to this place, you discover that, okay, you want to move to the other side after this place has been fulfilled. What you do is you add. So to move it to another level. Then you input those numbers that we have here for you to be able to get accurate setting. Broker does not set this. It's not because they don't want you to make money, but because they want you to make research so that you'll be able to know what you are doing in this business. Now, if you look at this now, look at this from here. My own setting is changed. It has automatically been changed to what I have with the broker. So I'll put a link below, or you send an email to me for me to be able to give you the template of that setting. The settings are not the same. Now, how do I take my trade after plotting the fib levels on my chart? So if I leave these fib levels on these charts, it will become very messy. It will become my chart will look to me, it will look so dirty. I will be able to take accurate decisions. But in my trading, I need what? I need levels to be able to do what? To be able to identify my key areas. Because I am taking my trade from 1 minute charts. So I need level to be able to identify key areas for me to be able to play along these key areas. Now, what I will do now is to draw a vertical line. I have to draw a vertical line. An horizontal line rather. I need to draw an horizontal line, identify those levels. So these are the levels. I'm drawing an horizontal line, identify those levels. So these are the levels. I'm trying to identify those levels. So I'm still doing that. So I'm trying to bring in those levels so that this will aid my trading decisions. This will aid my trading decision. Good. So these are the levels. Now, if I move down to a bigger time frame that is bigger than that of what I have, if I'm taking this from here, let me take for instance, I'm taking the 30 minute, let me move down so that you can see. So I can as well change the level, draw those levels for 30 minutes. But because for now I'm working on a different time frame, so I now have plotted those levels on a different time frame. So these are the level for now that I'm using. Plotting it on a different time frame. Very good. Then I have to put this. Because this is going to give me an extension. It's going to give me an extension. So now, because I've been able to, I've drawn the line on my chart, I need to take it away. I need to remove it so that it will not make my chart to look so dirty. Now, I need to trade. And these are the levels that I've identified in 15 minutes and 30 minutes. Now, I have to move down to this level. So, how do I consider a very critical levels while I am trading? Now, because I have my Fibonacci level here, and also have my pivot points here, and also have my 240 moving average on this chart. These are what I am using on the chart. Now, good, when we want to take a trade, I'm going to be watching all these levels if I eventually enter my trade using my own analysis. Now, if I'm taking a trade, let's assume that I'm taking a trade from 4 hours. I'm looking at my 4 hours to get an entry. Now, if you look at this place from here, this is my entry. After this candle has eventually engulfed some of these candles. So let me expand the chart. So after this very candle here that we have here, this candle here has engulfed the candle that is here. If you look at the candle, all this candle below here has been engulfed. So what do I need? Because I'm having this, so I need to take a trade and enter from here. So for me to do this, I need to move down again to a shorter time frame and see the behavior of those moves. I think I need to lock all this so that when I'm doing the analysis, it will not be moving. So let it be locked. Let it be locked. That's good. It has been locked. So now I move down again. Look at my 1 hour from here. after a break of the 1 hour, after my 1 hour has broken this side, this is what I'm looking to break after an hour has broken this area. So what do I need to do? I need to be looking for an entry. But if you look at this place, this very area from here, the fib has done what? Has repaired the prices back to this area. Now, to me, as a trader, because once I have seen the fib level, the resistance level of my pivot points, and I'm also seeing the trend line that are lying across this area, then I consider those areas as an areas of double. Now let me take a screenshot of this area. I think I need to take a screenshot of this area for us to understand how things are run. So let me take a screenshot. So if you look at this place, I'm going to explain it better to you now. Now I'm taking a screenshot of this very area. Now, very good. Now, if you look at this very place, I'm taking a screenshot. Now, let's look at this area now. As soon as the prices approach this area, that we have our fib level. And before that, we also have our resistance 1. As a trader, when you are moving, you are trading, you must take cognizance of this area. You shouldn't jump into it. And you don't believe that fine, because the prices are engulfed, because we have a very strong move from here. This is going to give us, this is going to be a continuation of the move. No, it does not work like that. Because what? Because at the fib level, at the Fibonacci level, and at the area that you have your support and resistance, this area are called areas of double. I refer to this area as an areas of double. This area are the area that prices has been previously priced. And now once they are getting there, they will do what? They will react to that area. I think I need to pinpoint this area for you to understand what I mean by this. I need to pinpoint this area. So this very area is the area I am talking about. This area is the area that we are looking at. Now, for us to see price at this area, this junction, we should know that prices, once they got to that place, after plotting our pivot level, after plotting our Fibonacci level, and we discover that those levels are there. Those levels are what? They are there. So we need to respect the level as soon as the prices are moving to that place. So once those levels are respected, what do? You wait and know that the prices are going to have a lot of consolidation at that point. Now, I am having various things here that is telling me that I need to wait. If you look at this place now, I'm having what we call fib level, and I'm also having what we refer to as resistance level. And at the top of that level, I'm having a trend line that is lying above the price. So this is telling me as a trader in me is telling me that this area is going to have, prices are going to have a lot of difficulty moving forward. Now, when you are taking a trade, probably from here, you are taking a trade from here and you ride it to this place, you understand? And if you look at this place too, there are what? There are pivot level from here. As soon as you get to pivot level, you are entering a trade. Probably you enter a trade, probably use your 1 minute to enter that trade, and you approach the pivot level. What you need to do, take your what? Take your profits. Take whatever the market gives you and exercise patience. Look at how prices are behaving at that point. Prices might be going up, it might be going down. Still exercise patience. Don't do anything. Stay out of the markets. Look at what the prices are doing. Now, if you look at this place from here, now let me bring in an arrow. From here now, from here to to this place, you will agree with me that when prices break this area, that is when there is a break along this area, when we have a break along this area, then we take our trade from here, then we go to the fib level. Now, you might be looking at this is very close. It is not close, because the trading I am taking those trading from 1 minute chart, and I'm looking for what? I am looking for a move that will challenge those moves. Now, if you look at this place from here now, this is my break and this is my entry, and my entry is in accordance or is in agreement with my SSS that I call stochastic agreement. Now, if you look at this place now, from here to here, the prices are doing what? The prices are showing a bullish move. The prices are showing a bullish move. Now, let's take this out. Let's undo this and see how it goes. If you look at this place now, from here, the prices are doing what? Now, if you look at this move starts from yesterday. That it started from on the 26th, which is on Sunday, and it moved to what? It moved to today. Now, a trader in me, now if I move down to the chart, you will discover that is the chart. Let's compress the chart to see where the prices are lying. Now look at it from here. This is where we have the move is going. The move is going up. This is where we have the move that is going up. Now look at it from here, because we have our fib level to be at this point. Then we have what? We have the prices doing what? Finding it difficult to move. Now, if I'm taking my own entry, I'll be taking my entry when we have a break of this place. We have a break of this place. This is the candle that engulf. And why do we have this candle coming down? Now let's go back to our 30 minutes to see why we have those candles coming down. Now, if you look at the 30 minutes, from here, 30 minutes has eventually revealed what happened to us. Now, from here now, we have seen a break of, this is our entry after a line after this place has been breached. This is our entry. Now, from here to here, that is what we are interested in. But while we are moving from that place to this place, what do we need to do? We have formed what? We have formed the pivot level, which is the pivot level, and the fib levels. They are in a spot. Now, that is a sign that we have an areas of double. This area is an areas of double. It's a complex area that the prices are born to respect. Now, look at this place. When the prices move from here, it engulfs from here, and it got to this area. Like I've told you in my previous lesson, that the pivot point or the fib level is not an exact figure. That is an area. All these places is an area that the prices are likely to get a reverse. I repeat again, that the pivot point is not an exact figure. That is an area that the prices are born to do what? Are born to respect. Now, let's move down to 1 minute. I think I have to draw a vertical line to my entry so that we can get what is going on, and we can see how we can identify those areas once we move to a shorter time frame. Now let's move to 15 minutes. Now you see that now I am taking all the time frame into consideration before taking a trading decision. There's no way you could do this without considering your trade from monthly, weekly, daily, 4 hours down to the last hour, which is 1 minute. Now, if you look at this place from here now, you will agree with me. I think I need to take a screenshot of this area. Let me take a screenshot of this area. So Let's take a screenshot. Good. Now, you will agree with me that from this very place, that from here, from this very area, that this is where we have what? We have an engulfing pattern. After a retest of the 240 moving average, I've told you to get a proper entry in 1 minute. You must wait for your 240 moving average to do what? To move. Your 240 moving average has to do what? Has to move. Your 240 moving average has to move above the price before you can have a bullish move. And while they move above the price, there must be a retest. Look at what happened from here. After they moved, they got to the pivot points and they got to the areas of what? Areas of confluence. That we have the pivot points and we have what? We have the Fib level, the Fibonacci level. This area eventually repaired the price. Now, what this is telling us is that at this point, there are sellers that are ready to do what? That are the suppliers or the buyers are there that are negotiating. Both of them are negotiating because these areas were previous area that negotiation has gone up before. So they need to negotiate at this particular area. Now, there are negotiation at this particular area. Okay, negotiation is going on. So, because we have this negotiation here, the prices are bound to do what? Are bound to respect this area. Now, let's take this. If you look at this place now, after the cross, what do we have? After the breakout, we have an uptrend. And if you get to this place again, we go to resistance 1. From resistance 1, our pivot point is line as resistance 1. What do we have again? We have what? We have a run down. So that is why when you take a trade, you set up a level that you are going to take your profit. After taking that profit, exercise a lot of retreat. Exercise a lot of caution. Don't enter immediately. Don't see that this thing is bullish. Oh God, I want to go in. Those ideas has gone. We don't need to look at those ideas. Those areas has gone. What we have now is that we need to exercise patience to make sure that we observe. Now, this is where our observation come in. From here, we need to observe. We need to observe what is happening before we make our decision. We need to know that while we are taking this trade, there must be an observation. Are you getting the point now? Now, after that, what do we have from here? We have a rundown. Look at it from here. And a rundown to another pivot area. To another pivot area, telling us that this area might also do what? Might also repair the prices to the uptrend. Now, you will not appreciate how this is moving, but there's one thing I want to point out from here, which is this very blue line from here. If you look at this line, this is a very serious line. Look at this blue line. This line is what I refer to 240 moving average. This line is what I refer to as 240 moving average. And this line is a line that will do what? That we repel, that when prices crosses, when the prices cross that particular line, is telling me that the bias, the sentiments that we have currently on that particular time frame has changed. Look at that statement. The sentiment or the bias that we have currently at that particular time frame has changed. That is when the 240, when the prices crosses the 240, that is to tell you that the situation has changed automatically. If you look at it from here now, when prices struggle, they struggle from here, they move, they come back, and after that, they survive. Once they survive, they come back for a series of tests. They continue to hit that area severally. They continue to hit, and once they are unable, they move forward again. Now, once they go to the pivot area, they retest it again. The retest has failed. What do we have? Once it has failed, what we will be having is a run-up. But in as much you are your prices is above, don't look for a downtrend. Don't consider this as an entry unless you are an expert. That's when you can use this. So I will not train you to do what? To continue to look for this as an entry. Consider this as an entry in relation to where prices are crossing. Prices has already crossed to the uptrend. Prices has told us that he is ready for what? For a bigger move. So let's move down to another chart. Let's move down to 1 minute or 5 minutes. Let's see what 5 minutes is saying. Now, if you look at 5 minutes from here, now for today, the prices has crossed. This line means where the market starts for today. Now, after the WTI, which is the United States crude oil, now after they have done what? They have resumed the markets for that day. Now, every parameters, they come up and they continue to play along this. Look at what happened from here. We have prices crossing above the 240. Once the prices have crossed above the 240, then as a trader, you need to wait. Now, these are the trades that I took today. Look at how everything is green up. These are the trades that I trade on gold and WTI. Let me show you the WTI. These are those trades that I took on WTI today. So those trades I took on WTI, I think I need to, yeah, these are the WTI. Look at all those trades. Everything is positive. Everything here is positive. Now look at it from here. You can achieve this kind of, look at it, everything is positive. This is what I've been doing for throughout today. I have the opportunity, once my parameter is up and I discover that everything is working, I don't hesitate. I enter those trades in a multiple form and I take my profits. I start with it, I discover how it is running. Then once it got to my this thing, I set a very minute target. You understand? To be able to enter in a multiple way. Now, let me go back again to my 1 minute that I use as my entry. Now, if I'm moving down to 1 minute, now I think let me compress the chart so that you can see how 1 minute work. Now, look at this. Immediately, I will not take this trade. Why? Because this very place is not in agreement with my 5 minutes. Now, let me draw a vertical line. Why do I say it's not in agreement with my 5 minutes? Is that the 5 minutes has crosses, or the 15 minutes has crosses the uptrend. And what do we have from here is noise. It's noise that we are having here. This very particular area is noise. That is why I'm telling you that I'm using my 1 minute to filter out the noise from the market. That is the essence of the 1 minute. I'm using the 1 minute to filter out the noise from the market. Now, if you look at this place now, all this area is noise. So, taking my entry for a downtrend here is very risky. Now, let me go back to I think let me segment. I think I have to segment this market into two forms. Let me segment the market. Let's just segment the market into two forms and go back to 15 minutes for us to know that this very direction is not worth taking. So let's go back to 15 minutes. Look at it from here. Because my 15 minutes has crossed, and this very move is what that's why I don't advise, don't trade it. Because this move is an action of Fibonacci. It's an action of Fibonacci retracement. Now, what you need to do at this very junction is to exercise patience. If prices break this down, that is the prices here, break it to a, now let me expand it so that you can see it very well. So I'm coming. Now, if prices eventually break this to a down direction, that is to tell you that yes, we are in for what? We are in for a retracement. Because prices does not break in 15 minutes. You don't have any point. Once your 15 minutes is giving you, your 1 minute is giving you an entry, you should, even if you want to enter with a very small loss and take your profit very fast. Because this does not give you, this 240 has eventually repaired the price. So I'm going to make a videos on this 240 moving average for you to know how it is being used. Now let's go back to 5 minutes and see how 5 minutes is. Look at what is happening in 5 minutes. You understand? Because my 15 minutes does not break, and in 5 minutes I'm having another what? I'm having another fib level and another pivot level. These two are there. So this area is a very serious area that I will not consider an entry. And because my 1 hour as a golf, look at my 1 hour as a golf. Look at it, because my 1 hour as a golf from here, I am not taking a downtrend. So I am looking to go short, and this is exactly what happened from here. Now let's go back to 4 hours and see if our 4 hours, look at 4 hours from here, 4 hours as a golf from here. Look at it from here. So we don't have any means to do or to take a short trade. Now for us to take a short trade from here, we must allow this price to form what? To get to the 240 moving average. Once they move to the 240 moving average, they continue to, now it's approaching the 240 moving average, they continue to behave in a funny way. Then what do we have? We have what? We have a downtrend. If eventually the prices engulf. But with the look of things now, what I've seen now, if this 240 moving average has been challenged several times and it does not, the prices does not prevail, the prices did not prevail, we are going to have a run up to the uptrend, that the price of crude oil will start going up if they eventually break the 240 moving average. Now, these are how you enter the trade. But let's look at how Fibonacci is working in 1 minute. Now look at this place now. Look at this place from here. We have our fib level. Let's see how it's working. Look at those critical area where prices are hitting those areas. They continue to come down. When they come in, they come down. They retrace. Once they come in, they retrace. So in other words, because we are having prices because we are having this place as noise after this place, because our 15 minutes has not given us assurance, and our 1 minute as our 1 hour and 4 hours as engulf. So we don't need to preempt those areas. Even when the shorter time frame is going up, look at what your 1 hour and 4 hours daily is telling you. Now if I move down to daily chart, you will see that, look at what my daily chart is telling me. Since last week, let me take this off. Since last week, I've gotten, look at it, this place has engulfed. Look at what this very candle has engulfed this candle. It engulfed with the what? With the wick. It engulfed with what? With the shadow. This has engulfed. Immediately this has engulfed, I don't look to go down. Even when all those ones are going down, I consider those moves as what? As noise. So I'll be looking towards the engulfing pattern in a bigger time frame. I'm not concerned about the move that my 1 hour is doing. Immediately we have what? We have the price to do what? To move in the direction of the bigger time frame. Then you will see a very serious move going up. So I'm not concerned about the noise that we are having here. Like I've told you, the noise that we are having here so far, I am not interested in trading them. Look at all these ones. I refer to all this as noise. This area. So as soon as this area is broken, because this area that we have now, what is bringing this down is support, is resistance, is Fibo. Is the Fibo levels that are doing all this. Once all these areas has been taken care of, then what do you have? You have an entry. You have what? You have a cross to the uptrend. Look at the cross to the uptrend. Look at how it goes. Look at how it goes. Today now, I've made a lot of money trading the WTI, which is the crude oil. I've made a lot of money trading the gold. So, and I really appreciate you because you have come to the end of this class to this time. So I will implore you, subscribe to this channel so that I can supply you more information and we can build this class together. I mean, we can build these channels together and form a community of traders that are successful. So that we can be among those 1% that are really successful. So I will implore you to subscribe and hit the notification button. So when I release another video, you will understand. You will be the first person that will be notified.